So in this episode, I'm going to show you the trades that I took, and then why I took them, and then how I manage them as well, and then stuffs like that. So basically, I'm going to start from higher time frame. This is USD card where I took the trade, and then my entry, but what happened is it happens to be those ones that call me. So that is the reason I did not take this trade there. I posted it on the group. So yeah, this is the trade there, 2.3%. It's not a bad trade. The next trade that I took was on Euro GBP. This one I dropped the signal on the group, and I think a guy was able to hold it, but for me, I just had to get out of the trade. The guy in the group was able to hold the trade and then maybe capitalize a little bit more than I do. Yeah, so yep, I was actually looking to capitalize it to the 90% of the position, and then we have this. Look at that, we have this move, and then we have this hook point here. Look at that. Look at how we approach this point as well in the form of monthly trade, and then price commit, give the insurance entry. I entered the trade around here, as you guys can tell or remember. You have the short on my phone, so probably I'm just going to drop it or include it after this. Now, when I see this pattern here, I actually mark my highs here. So what saved me here is on one of my competition accounts, I got tagged out, I don't know, and then on the other one, I happened to stay on the trade. So as you gotta remember, I took one ascending channel within there, and I have my SL placed around 10 pips. So that is actually what saves my life on this trade. So like this. I took it on 5 minutes, if I could remember. Yeah, 5 minutes. No, it's not here. I took it early on. I was actually, and what happens is there is this thing that actually made me really happy about this trade. Is that recently EP Ansari, post the trade. He was actually looking at this trade as well, and then he happens to, the place happened to tag him out for a loss. So, but that's not the point. I was like, I'm happy that EB was looking at the same trade I was looking at. That is actually a good development on my side. So I took it, yeah, because on this channel I just took it somewhere. Yeah, I set my order there as well. Yeah, it should be. I set my order here, and then I'll check my phone. I'm going to send you the shot. I think I have it. I'm going to send you the entry. So now look at that. I think it was maybe during the swap hour that I got tagged out on the other account. So at the point when it here, I put my wheel line here. So I just moved my SL to this point because I wasn't expecting. So I was expecting a continuation from this point, but I wasn't expecting it was going to come create a week. It just whipped me out and then headed. I think the guy was able, I don't know how he managed to do that, was able to capitalize on the trade down to close to the 90%, around 6 or 7%. But for me, it was just around 2%. So I was happy. Yeah, it was a fantastic trade as well. As you can see, it is my client impulse. Higher time frame, 1 hour structure. We have ascending within that 1, 2, 3, and then within that we have ascending. So that's why I set my entry, and then I happens. I think Coach EB entry around here. EB he using varies in the around 8 or so. So out and eventually played out. So I was just too happy to see that EB was looking at the same trade that I was looking at. It happens to me with one AUD NZD trade. Back then I was actually looking at the trade, but unfortunately for me, I did not take the trade because of the same criteria. EB understood the structure better than I do. EB took the trade, but I ran out of the trade. I went and take Cardian because Cardian was forming at that point. So because of that, I avoid the trade and take Cardian, but Cardian stopped me out, and then happens. So here on US oil, I was looking at these 2 points to say point of interest. Price originally retraces with a retrace candle from the daily structure from that point of interest. So I was now looking at this lower time frame, So what happened is price move, create this, and then price move. Like I said, this is not a valid area as well, because price was actually, this value area is no longer that strong because price was initially targeted. So the reason I took the trade was because of this momentum candle. And then when you go to 4 hours, you see exactly why I took the trade. And then you know, it's just what it is. So yeah, at this point I was looking at it as, okay, possible 1 2 3. I understood this could happen, possible 1 2 3 formation. But I also understood that, okay, price could actually move from this point, especially after these impulsive candles here. So I actually take a around here. So the price closes at the edge of the structure. I think I posted this. I put this on my group as well. Price closed at the edge of the structure. At this point, I went to 15 minutes. Fortunate for me, you know, I got one. Look at that. And then my order is here. Thing I've forgotten the clip stuff that I use, so let's say anyone that I use, it was a loss, so it doesn't matter. Yeah, got tagged in, tagged out immediately, no brainer. And then price heads to the upside. So as you can see, the trading plan that I gave to you guys, as you can see it's a little bit risky, but it is what it is. Impulse 1 2 3 closes at the edge on 1 hour, and then price could actually reject from here. But now let's look at 1 hour and see what kind of price action we have here. Now at the third touch, price closes at the edge here. So all you need is maybe 15 minutes rejections candle to sell. But then possibly you would have maybe get into this. But for me, I did not take any trade as well because I've already taken a loss, and that's okay for me for the day. So I was actually waiting for this market to actually come to this point of interest. Then I can look for entries and maybe 1 2 3 kind of structure, and then you know, if price tag that area around here, look at that insurance entry, 15 minutes, 5 minutes, 15 minute refine or 5 minutes, or 1 hour refine 15 minutes. Then I'll get involved around points here. So I'm going to drop my analysis as well. So the next one was gold. Gold stalled me on a break even on the daily. I was looking at this point of interest here. I was looking at this point of interest here. So I was looking at that point of interest here. I knew price could actually reject from there, but then I was looking to complete this pattern, to like complete the buy to this point of interest. I think price was around this area when I bought, somewhere around this area. So let's go to 4 hour so that I can see where I bought some and the reason I bought as well. Now price initially was here on the break. The price came back here and then was deliberate just to complete the pattern. So that was actually what I was looking for. I was just trying to play the pattern. Let's go to 1 hour so that you can see. I was trying the pattern completion here on gold. I have my stuff like this. I think I use this for any value rest. Yeah, I use this value right here. I think because it near misses it, I feel like okay, price was still coming to target one more time. 1 2 3 structure. I have my gray line and there's one here. So because price kind of closed a little bit closer to that point, like I saw on the trading plan, close at the edge or very close to the edge. Look at where the price closes. So and then it just gets to the point of interest. So I need to retrace candle, and then eventually I got stopped out on the trade for a break even. Took my entries around there. around there. Listen, it was actually worth it, but then price tagged me out for a break even because of the risky kind of side of the trade. So when price closes here, just all you need to do is to move to break even, because that's potential of stopping you out. And this stopped me out on break even. So those are the trades that I took, and for that last week or last 2 weeks or so. So now the USD yen pairs that I talk about, a guy was actually selling this pair. I don't know why he sold. So you can see higher time frame, we have this hook point. Price initially break that hook point. Though we have this channel, like I said, is irrelevant. It's just to see the structure that we have. So we have this ascending structure, which indicates a reversal. So now when price impulsively break back, look at this point of interest that I told you, the value area as well, because it's a continuation, and look at how it has initially moved price. So there's higher probability of price reversing from this point, which it does. But the reason I was looking at for the sell around that point, because of this momentum, we're still playing the daily momentum. So we have that momentum, we have this hook point here, it's a 1 hour hook point. We have this hook point here, and then we have this 1, 2, 3 ascending kind of continuation into that hook point. So I was waiting, I dropped this forecast there, I was waiting for the insurance entry, but then there is nothing insurance. Look at it, the thing is very, very choppy here. There's no way I am going to enter this position. So even if you should enter, it would have been a break-in, but there's no way I was going to enter. But I want a clear push to the downside, insurance entry, and then I get on the trade, especially because of the low. There's no way. So what happens? Price begin to create this. So price evolve into this structure, tag these on this mini low here. So now the reason I did not take the trade was this. Look at that, this place was a little bit corrective. It's not this clear impulsive move. So what I was basically looking for when I saw this was that, okay, they still have potential of dropping. We just found a running channel and then still drop. So what I was looking for, I want price to close, to break this low here, and I'll be looking for entry. Let's break the low, I'll be looking for entry anywhere here. However, if it comes and rejects here, I'll be looking for the buy around here. This was my 2 forecasts. Both is going to be a kind of insurance entry, so okay, that to the up or the downside. So what happened is, price, this was a little bit very, very corrective. Having been the price action here was impulsive, and I'm getting 50 minutes flat, sure, I'll get in on the trade, but it's corrective. So when you get to the 50 minutes, there is a kind of tight flag down 50 minutes. Yeah, like I said, there's no way I was going to get onto this trade because of the nature of the price action. So yeah, you have that retrace, and then it should have been very correct, very impulsive. Then it should have been the entry, have your SL around 16 pips below, and then definitely this would have taken you out around it was initially 6%, so I was going to look at 4% the way I managed. So definitely it would have stopped me around 4%. Yeah, so it was a nice trade to the upside, but then it doesn't meet my plan, so there's no way I was going to take the straight. So yeah, the guy was selling around here. Like I said, look at it. Is 1, 2, 3 doesn't mean it's going to sell. So it's risky. Some people will be selling around this. Like, I don't know. Some people might put their real line here, like, yeah, the double top, sell on this rejection, or maybe go to lower time frame and sell. No, we are not doing that. One more commitment. So we knew we have a hook point. Look at the hook point, the value area that I talked about, a continuation value area. So what we need is price gravitating towards those areas and give us a short entry, and then we sell. So look at our price corrects, maybe sections drop. There's no way we are going to I'm going to enter this kind of trade. So I'm happy to stay out, and then it doesn't give me what I want. So those are the trades, and then these are how you do it. So yeah, this is our first video. So as time goes on, I believe yeah, I'm going to